Good morning, everybody. Welcome to the Flow Show once again. We got there. We got to Friday, the end of the week nearly, and well, what a funny one it's been. We should talk about the price moves and everything that happened over and after the CPI data, of course. We'll just get through the headlines first and data and stuff. Firstly, in China, some CPI numbers and trade numbers out of those guys. CPI flat on the year, PPI as well coming in negative, more negative than expected. So still facing a little bit of deflationary pressure over there, not quite hitting some year-on-year negative numbers just yet, but we're on the line. And if that does tip into the negative, then we could get the PBOC and officials doing a bit more. None of them are expecting any sort of deflation numbers there. Trade-wise, as you can see, a bit of an improvement in the trade balance, but look at the activity side of things. Exports and imports still posting negative numbers. So still not looking good in terms of overall activity for those guys there. Get any data this morning? Yes, we did. We got some of the final numbers from the Eurozone, all largely unchanged over the prior numbers. France, though, the HICP measure was expected to come in at the flash number 5.6. It came in as in last month, 5.7, so no change there. Spain, a little bit softer on their inflation as well, on the core number anyway. Their headline number went higher, as did their HICP number, beating expectations on that one, nearly a whole 100 pips higher than the prior month. But they'll take a bit of comfort from that core number at the very least. Industrial production looking a bit sucky. In the Eurozone, up on the month, but worse year on year. So 6 of one, half a dozen of the other on that front. Back to China, and they are apparently going to look at potential new stabilisation fund to prop up the stock market. So further moves to keep things afloat over there. In Japan, a government official said that the G7 reaffirmed that excessive moves in FX are problematic. So again, another bit of a rubber stamp on what those guys and girls want to do over there in Japan. BOE's pill continued to waffle through yesterday's show. One of the lines was that it's premature from a policy perspective to be discussing unwinding of policy, i.e. talking about cuts. BOE's Bailey was on his holiday in Marrakesh, avoiding the dreadful weather we've got today here in the UK. He said solid progress on inflation, but there's still work left to do and policy needs to be restrictive. He said the recent decision was a tight one, talking about monetary policy, and going forwards, decisions will continue to be tight. Wasn't overly optimistic about the current state of the economy either, for a change. ECB's Holtzman doesn't see inflation going back to 2% anytime soon, hence why he's going to remain on the hawkish side. ECB's F.A.C.E said the main challenge for monetary policy is the lack of accompanying fiscal policy. We're probably going to start hearing this more and more, especially from Lagarde, as the ECB come to the end of, potentially the end of their hike cycle. They're going to be now pressuring countries and governments to do their bit on the fiscal side. It's been a constant thorn in their side and a moan for them all the way back to Draghi and beyond. It also says that the ECB should begin to debate on QT and should consider all options. There has been a piece out today from an ECB source saying that we shouldn't rule out the potential for a decision on the PEP this month or the next ECB meeting, but hopes that the discussion will at least start. So maybe there's something coming on QT at the next meeting. ECB's Nagel spoke yesterday that went a bit neutral, considering language previously, but he said the ECB won't rest until inflation is back at target, so back to its hawkish self. ECB's Visco, Italian central banker, says no signs Italy spreads are to reach a level for ECB action. Italy debt reduction has been substantial. We're just keeping a half an eye on this one. You know, the chatter about ECB, about Italy's debt situation, run up in yields, etc. He's just getting a few more headlines now. Economy Minister also came out saying he's not worried about potential for a downgrade, a ratings downgrade on the situation there. So I don't know. It's been a fairly quiet week, and sometimes, you know, markets like to focus on problems where it may not necessarily be valid. But Italy, as I say, getting a few more comments around markets now. So a few more people sitting up and taking notice of the situation over there in Italy. That if that gains, it will do the usual thing and spread into is there debt problems in the whole of Europe, blah, blah, blah. But anyway, just something to keep an eye on. Right, so let's go back to yesterday, the CPI numbers. Now, came in roundabout as expected. The core particularly matched expectations, 4.1%. CPI was expected to drop a bit, stayed unchanged in the end. So no real big change there. However, the dollar took off and continued taking off, and yields took off and continued taking off. Jobless claims as well came in, you know, pretty solid, as there have been no real red flags there. Now, within the CPI numbers, we had the earnings numbers as well. Now, real hourly earnings year on year came in unchanged at 0.5%. Real average weekly earnings came in at minus 0.1%. It was prior up 0.2%. So in real terms, wages are down. This also might be something that added to the reaction we saw. Overall, the CPI numbers, particularly if you take the CPI, show stickiness. You know, we've been up twice the last 2 months, and now the third month it's unchanged. So stickiness is there. The core, however, has been coming down consistently. But it does lag, so there may be some thoughts that this core might as well bottom out at some point and maybe even start creeping higher, as it has done in CPI. Also, that negative real wage suggests that inflation is still obviously a hindrance. So people who are not earning the money, they're seeing an income drop because of inflation, which again is something that the Fed will want to tackle. So the market has got a little bit more hawkish, not overly hawkish, but a little bit more. Rate expectations for November still only price a 10% chance of a hike, but December briefly jumped up to roughly 50-50 for a hike hold deck meeting. It's now back down to around 30%. So November seems to be in the market's eye out the picture. But December seems to be firmly on the table in terms of potential. Now, also, we had another crappy auction in the 30 years. Again, a lower bid to cover ratio, 2.35 versus 2.46, and another big tail, nearly 4 whole points. So the market is picking up on that as well. It's seeing a pressure on yields. It's driving yields higher, as we've seen. So we've got a lot of influences coming in as to why the dollar's rallied, why yields have jumped up again. Now, significantly, yields rallied up and it tipped above 4.7. This was the line I've been looking at, bit of an important level. Poked its nose above, but then failed. So we're back below, which might be significant. It might be significant in at least protecting this top up here. Now, what it has done really is it's shaken the tree a bit. So we'll look at prices in a moment, but it's put the dollar on the front foot, whereas it's been on the weak foot for the last couple of weeks or so. One other thing just to point out later on today, the data is a bit light. We've got the flash number from the University of Michigan Consumer Sentiment, which, given the thoughts on inflation and the like, those inflation numbers there we need to be looked at closely. There's no expectations for them. They were last at 3.2 for the 1 year and 2.8 for the 5 year, and that both went higher over the month previous to that. So that's our data fix later on, which may add or take away from what we've seen so far. We've also got bank earnings coming in as well, kicking off when stocks are open or just before stocks open, and those come all rolling in. So you need to keep an eye on stocks as well to see what those do, as well as what that means for potential GDP for Q3. We had a pretty stellar Q2. Now we get to see whether Q3 matched those numbers, at least from the bank side. That's always a good market gauge. Right. So anyway, we've had a little bit of a tree shake, and it's easier in the cold light of day the next day to look at it and analyze it and try and understand what went on. But for me, what yesterday showed was that it doesn't matter how good your plans are, how good you think your plans are. If the market wants to take you to the cleaners and pull your pants down, it's going to do so. So you knew my thoughts going into the CPI numbers. I was going to play it the same way as the PPI, sell a dollar rally on strong numbers. Got the dollar rally. I had the evidence of how the market was going to react based on what it did for the PPI. So I dipped into euro dollar. I very nearly bought up near the top just before the numbers. I was thinking, if we get a similar reaction, I don't want to miss it again. So I nearly jumped in at 22.23, literally seconds before the number, 106.22.23, and that wouldn't have been a good move at all. In the end, I saw the data. I don't feel the data is overly strong. I don't think it changes the Fed in any way, shape or form. Yes, it is sticky, but sticky enough to go for a hike, I'm not so sure. But anyway, I bought it at 106.04, or started buying it at 106.04 because I thought the data wasn't that strong for the dollar. Added 80, and I've added some more at 30 today. So it's not looking too hot at the moment. We're back down there. I am going to play it down to the 105s. But as I say, a bit of context is needed here because we had this is a big move, okay? But it's a big move in the context that we did naff all week. Really quiet week, and then we get a bit of volatility and wallop. We get a decent move. So this has caught a lot of people out, myself included. I also tried cable right in there, small trade down at that 122.60s area because it came down. I thought, well, okay, let's see if the level holds. That's where I was looking for support. It held for about 5 minutes and then off it went. Same for dollar CAD, another one, fingers burnt. Tried selling in 36.50. Boom, got stopped out of that at 70. None of these trades were for big pips or big stops or anything like that. Purely just level trades, back in my theory of how the market may move. So, yeah, some big moves. But again, as I say, context needed here. Look at something like euro dollar and just look at it in terms of the trend. We've had a big trend. We've had a bit of a bounce. I've been saying it hasn't managed to take out any big levels yet, not even close to getting up to 38.2. Possibility of a dead cat bounce. Well, that's what it's looking like right now. But for now, we're holding the zone here. So the support that was down here on the break of 105, it's stepping up. Probably got a bit more again at 105. But, again, we might see it move down a bit lower. A 105 test will be interesting to watch. If it holds there, then in the wider picture, we may be setting up for a bounce. It's a similar picture all the way around. A lot of the dollar pairs. Cable is the same thing, although it's looking, obviously it's moved a bit further than euro dollar, as it often tends to do. But you know, you're going to see a similar picture in the Aussie, the Kiwi, whatever. We've had a bit of a dip. Is it going to bounce from here? If it does, we have a chance taking out this high and then moving up. Or is this the end of this rally here and we're going to head back down to the lows? Then we need to see what happens down here if we do. Dollar yen creeping up towards the 149, the 150 area. It broke above the 2030, broke above the prior high. It's looking fairly bullish. There's going to be some nervousness, though, I think, coming into 150. If we get up there, the market's obviously been bitten once back here. It'll be worried about getting bitten again. But it might just start creeping up and being a bit touchy-feely. And if it goes through there without any problems, through 150 without much problems, no phone calls from Ministry of Finance officials or whatever, then the market may get a bit more confident to take it higher. If that happens, we could be heading a bit more higher, maybe 151s or something like that. But I think it's going to be a nervous move, as I say, a bit touchy-feely in terms of is the market going to get too far out its comfort zone, getting long up here at the top. So, yeah, not a good day. I did nothing all week. And then when I did trade, it all went horribly wrong pretty quickly. Such is life. As long as you're not losing arms and legs over that situation, you know, you're not trading massively, then you take a loss, you move on, and you come back and fight another day. I still don't really believe these moves are right. I don't believe dollar strength is justified. But again, context is needed for everything that's happened. You know, we've still been in a give or take 100, 120 pip range, you know, doing nothing for a lot of the week. So, you know, you've got to take the long-term picture in terms of the short-term picture. Yes, it was volatile yesterday. It's been quiet all week, though. So, you know, we've had one bit of blowout. What we do need to keep an eye on is this situation in the auctions and US yields, because in a roundabout way, in layman's terms, what this is telling the market is that demand is down, which shouldn't be a surprise that demand is weaker when you've got an increased supply. But the market is saying, okay, we want a bit more of a premium on this. If we're going to buy your bonds, we want a bit more money in our bank if we're going to do this. That's fine. We may continue to see these sorts of auction numbers coming out. As long as they don't worsen dramatically from here, then, you know, the market will adjust to what's happening, and it's going to continue. As Mark pointed out in our chat room, for Q4, the amounts being auctioned are pretty much doubling, if not doubling. So we're going to be facing these pressures. So it may be that we keep yields on the front foot as well, and we're going to see them higher. So just looking back to that space, you know, everyone's talking about the 5% mark again, particularly out in the long end. But if we just take 10s, yeah, we got to look at the lines. 4.7 is held for now. If we close above here today on whatever data and anything that happens today, then it's going to look potentially hairier. We're going to be looking at these highs, probably not in a not too distant future. Otherwise, I'm still looking for a potential bit of ranging going on, at least between here and maybe down here, maybe down to, you know, 440s, 435s, that sort of area. There's no reason for bond yields to collapse unless there's something happening. So I'm still expecting to form a bit of a range. That should keep the dollar, at least on the yield front, largely contained. But yeah, so I hope none of you got hit as much as I did yesterday. I'm still nursing these euro dollar longs, and I'll see what's going on. Why do you percentage scale on yields? Is it percentage move or yield rate? That's the rate of the yield, Denise. So that's what a 10-year government bond yield is at the moment, 4.62, 4.63%. It's not percentage moves or anything like that. I don't tend to look at bonds in price terms. You which is also something I have a little bit of a fixation about when people do technical analysis on yields. You know, you don't per se trade yields, you trade price. So really the technical analysis should be used on price rather than yields, but each to their own on that one. I got levels on here just to show where the potential points are in terms of the yield moves, but it's not technical analysis for trading terms in that sense. I don't need the MAs on here, I just haven't been bothered to tick them out. So as I say, from here on out, need to be a little bit careful. You don't want to, it's hard. I'm bearish the dollar, but I'm wary of this move because I know the factors now behind it, and those factors may not dissipate that quickly unless we see yield, you know, pulling back pretty fast. So all I need to do for trading wise is just widen my horizon a bit. Now we've got this volatility. I'm not going to be so keen to piss around in the middle here, as I warned about yesterday. I'm going to look for the potential bigger levels to trade. So that's going to be down at 105. These are the big levels, 104.50, where we know there's some barrier action going down there. Those are the key levels. This I'm just going to monitor and just manage my trade against these smaller levels. Now I'm in the trade. If I wasn't in the trade, I probably wouldn't be touching it here. I'd be waiting for 105 or 104.50, something like that. Again, for something like cable, you know, I don't want to get involved here now. I had my little shot to scalp off the potential support, didn't work. You know, no harm, no foul, few pips lost, move on. Now my targets are set down here, or where I'll be watching will be down here, down into 121, and this former low down here. As for the upside, we know where it was, 123, 23.10. We had a go, couldn't do it, so that's likely to become the resistance point again. If we are to continue this move that we've seen, it needs to get above there. If it doesn't, well, we're either heading down or we're going to go sideways for a bit. And as I say, it's a pretty similar picture across the board. Dollar CAD up to the trend line. I know some of our guys in the room have tapped some shorts up here as well, hopefully taking a few pips out of that, but it doesn't look like it's out the woods just yet up here. Dollar's keeping fairly well bid against the CAD, but it's hitting the tech zones. You know, after the breakdown, where do you want it to stop? You want it to stop at the prior zones, prior levels, and that's what it's doing for now. Get above there, I might be interested up at 138 again, purely from a technical perspective. That's a level I've been looking at, waiting for a while. 136.50 in the short term. If that gets tested and holds today, then maybe something's building up. Likely then we get a move through 137 if this level becomes solid. Didn't do much on the way through up there. Lasted about 5 minutes as resistance, but it might do something on the way back down. It'll be a measure of what the price wants to do, whether this move is real or not. Just looking at some other things, stocks, obviously we're going to be looking at that because of the implications of these earnings reports. So again, looking at a similar picture, rally, then we get a drop off. You know, you can probably overlay euro dollar chart on this and it looks exactly the same. So the key thing is how we react to these earnings. If these earnings are strong and we see a rally in stocks, if yields are still, you know, we've got a problem there, and that's going to see stocks coming off, then you've got a potential fade on the strong earnings numbers. You have to match it up though. So if we're going to see this persistence in yields going up and the pressure on stocks, these earnings might be a good, as I say, potential fading opportunity. You know the level, 44, 44.10. A lot of people have been marking that down for that one. Down below, you know, we've had a bounce off this 43.30-ish, 40 level, but we're coming back pretty quickly. So the potential for a break is a bit higher. Then we might get down to 43s, 43.10, see what happens down there, former support and resistance point. So all these levels are here to pick and choose, and we've got a bit of a zone just under that, 42.70s. So, you know, if you want to get in on some of these trades, you know, it may not make sense to get in right here now with these earnings coming up and everything else going on. So, set your stall out, pick your levels where you want to have a go, but you don't need to risk a lot. If you want to try a let off here, fine. You may give yourself down to the big figure. Under that, you're likely wrong. But because we've got several levels pretty close together, you can also maybe do a bit of scaling. You can put a little bit on there. If it goes, put a little bit on there. If it goes, put a little bit on there. If it goes. So you can risk, let's say you want to risk 0.5%. If you want to risk 0.5% just trading 43.30s, then you're going to need a tight stop. But you can risk 0.5% trading 2 or 3 levels with the same risk outcome and giving yourself a bit of room. So there's many ways to skin a cat, particularly when you've got an asset that's got lots of potential levels close together. That's the way I look to do it anyway. Right, anyone, any of you guys got anything in particular? Yes, Brand, there's a barrier down at 104.50. If you check out the dashboard, all the barrier information is in there, including other pairs as well, including euro, dollar, cable, and dollar yen. So yeah, we knew about all those barriers last week, mate. So check that out. Mr. A. Sayed, you've got a short position in euro kiwi since yesterday. Do you think the end might be near for this squeeze, or take your losses and move on? Let's have a look at euro kiwi. Okay, help me out a bit. What was your plan? What was your view? Just a short up the top here, or where are you short? I'm going to guess you're short below the top, seeing as you are in a loss. So what was your plan in the first place? What levels were you looking to short? Where were you going to put a stop? Where were you going to be wrong? I don't know if it's the end for the squeeze. This euro pair, or this euro pair is looking a bit stronger. It's had the break above here. For now, it's holding this break. So if you were trying to short up into this level, let's call it 178, and now you're above it, well, you need to get back under it. If you haven't got a stop in, you should have a stop in, and and you need to be thinking about where you put your stop. You might think about putting it above this high. It sounds to me you haven't got a stop in play at the moment. You need to get your stop in play. Otherwise, you're going to be wrong all the way up here, wondering what to do. And that's the thing I always say, particularly to inexperienced traders. A lot of people say, oh, I don't need stops. Yes, you do fucking need stops. Stops stop you from losing a lot of money. Stops make you wrong, okay? But it makes you wrong in your own terms, okay? If the market, pulls your pants down, you don't want to be offside more than you would like to be. That's why I had tight stops in my cable and my dollar CAD. If I was wrong, I'm not going to lose a lot of money. I'm not going to be 40, 50, 60 pips offside and then saying, oh shit, I wish I had a stop in play. Get your stops in, manage your risk from the start before you even push a button. If you're trying to short something like this, and let's say you're trying to short into this area, then where are you wrong? You don't need to be wrong 100 pips over it. You can be wrong 20, 30 pips over it. And if it bounces, nicks your stop and comes back down, that's tough shit. That's trading. Okay, but you've only lost 20, 30 pips or whatever on it. Okay, you move on to the next trade. So let me, I'm sorry if I've sounded a bit strong on you, Mr. Sayed, but, let me know what you're doing in that, and then we can look at it in a bit more detail for that. Ali says, there is another point I think is important. You should expect the unexpected, but in this business, expect the extreme. Don't think in terms of boundaries that limit what the market might do. Yeah, you're right. Well, we can all expect the unexpected every day, but we don't know because it's unexpected. That's why when you trade, the only thing you can control is your risk. Okay? That's the only thing you're in control. Doesn't matter what the market wants to do. I had my thoughts yesterday on what I thought the market might do based on what it did the day before. I was wrong. Okay? Right now, I was wrong. The price tells me I was wrong. My losses tell me I was wrong. Okay? But I'm in control of how much I'm going to lose on that. So I don't mind being wrong, as long as that wrong doesn't hurt me, and that's all you want to do. The biggest lesson I learned from the floor from someone was that trading isn't learning about how to win; it's learning about how not to lose. Okay, you can do that. If you can do that, the losses don't matter. I don't get upset with a loss unless I do something completely stupid, and then I give myself a kick up the arse and moan and groan about it and move on. But yeah, you got to, so there's times you can take a pasting, but I hate it when I hear people saying, oh, what's going to happen with this because I'm short and I'm offside. Well, you need to know what you were going to do with that if you went offside before you put the trade on. That's the thing I wish I could drum into people. Anise, you got stopped out of Kiwi dollar. Yeah. In times like this, you've got to do it, particularly with short-term trades. Anise, I do all the time. I don't care if I get in a trade, if it makes 10 pips, fine. I'll take 10 pips off the table. I want to get my risk down to zero as quick as possible. That's my only concern with any trade. Get my risk to zero. If I'm going to risk 50 pips, if it jumps 10, fine. I take 10 pips. My risk can now only be, I can bring my risk down to 30 pips. If it moves another 10 pips, fine. I take some profit, move my stop up. My risk is now 10, 15 pips. All I want to do is get that risk to zero where I cannot lose money. Because if you get that, well, then you've got a great opportunity that the only other thing you can do is make money. But yeah, it's all part and parcel of that. Anything you guys and girls want to talk about? Let's look at the old pound Swiss that we were looking at yesterday. I know our friend Sab was talking about this. Got a little bit of a bounce off there, but then we had a little move under. So we were talking about this level. If you want to trade it, where you want to keep your stops, it's showing you don't need to keep it too tight. 20 pips, 30 pips, 25 pip stop. Maybe keeps you in the game. This level's still holding down here, but these bounces are looking awfully weak at the moment. As I say, this is still a strange one. I don't know what's going on down here where you've got a level so strong for so long. It smells of something going on down here. Maybe a big order sitting on the bid down there. Yeah, the pound is relatively strong around some of the other grounds. But we look at you can always tell what's going on by looking at euro sterling. And let's get that a bit clearer. So, we had been looking a bit weaker. I pointed out this trend yesterday, just in the short term, the last, since the beginning of October. It was looking like we might be getting a move to the 86.10 area. I was looking at that for a long and we never got close, typical. But then we got the break above. So the euro is winning out in this one. There's no real fundamental news why the euro should be favoured over the pound. But for now, the pound is moving a bit more, or was moving a bit more than the euro was, hence why euro's going up. So this was why both were coming down, while euro dollar was coming down and cable was coming down. That's just the volatility effect. But here in the short term, we've come down, we've tested that line, we're holding that line. So, maybe there's something to build on there. But this is all short-term stuff, so I wouldn't be trading that personally. I'm still parked looking for if we get a move down there. Anise, dollar CAD is right shoulder on the daily. Oh, you love your head and shoulders. You lot, didn't you? Let's have a look. Right shoulder on the daily. Are you looking about the inverse here? Which I can see that there. Or are you looking about, well, that'd be building ahead if it does that. Yeah, inverted. I'm not a head and shoulders man. I'll tell you that. I don't trust them. I don't believe them. I think they're hocus pocus personally. But if that's what you want to trade, I'm more interested in trading the levels that I know are levels, if you know what I mean. But yeah, it could be building. But what does it do? Does it do this and build a hunchback shoulder, a wonky bit of a head here, or does it do another down and up? I don't know. I don't know how you trade things like that. You know, if it's going to be supportive, it's going to be supportive down here at 133.90s, 134. If it dips back, whether that turns into head and shoulders, I don't know. I'll be more interested in just that line as a level. But anyway, if you want to get wonky with your head and shoulders, then then look at the Batman formation in tens. If you want your head and shoulders, look at that perfect Batman helmet going on there. New technical indicator we've invented this morning. I'm going to patent that. I'm going to sell it all to you on MT4, make millions. Anyway, right. What have we got, as I said, coming up later on? That Michigan sentiment number. That's about it for that. As I say, the watch points are yields. Keep an eye on yields. That's going to reflect in what's going to happen in the dollar. Keep an eye on these bank earnings later in terms of their economic impact and also financial impact for stocks and what's going to happen there as well. And look for any divergences between what we're seeing in the current trends versus what happens in those earnings. I think we'll leave it there. It's been a busy old weekend. Hopefully I'll try not to burn my fingers again for the rest of the day. I'm probably not going to do an awful lot. Oh, Ali, go on then quickly. Gold. Let's have a look at gold. Well, there we go. Having a little mooch above that 85 zone. We got up there yesterday. Held, dip, bounce. We're through. What do you want to do with gold then, Ali? You want to buy it here or you want to sell it here? Quick, before I shut the shop. You along. Good stuff, mate. Make those pips. Good, you made profit. Right, well, thank you, everybody, for coming to the Flow Show. Thank you for following this week. The K-Man will be back on Friday. Giuseppe, you like the old Batman helmet? Good. I'm gonna stick a tweet out about that shortly. New indicator that we've just invented. Have a wonderful weekend, everybody. I say thank you very much for coming to the show. Thank you to all the ForexAnalytix people behind the scenes for keeping the show on the road. Have a wonderful time. We will see you all next week. Thanks a lot.